Hey, good morning, everybody. Man, it's good to be back. Happy New Year. Hope everybody's doing well this morning. Guys, we're going to ease into the year and have some fun. I'm looking forward to it. I'm glad to be back. You never realize how much you enjoy working until you don't work for a week and a half. Daniel, Happy New Year. Good morning. It's good to see you. Hope everybody had a great holiday. Got spoiled rotten for Christmas. Stayed safe. Everybody has all their fingers from the explosives on the New Year's. Um, for those of you brand new, I know there's been a little bit of a delay. Everybody's doing the holidays. I'm looking to see if I have any new names in here. If I do, if you're brand new, raise your hand. Let me know. Let me make sure that I get you taken care of today. But we're going to do what we do each and every day, guys. We are going to ease into the year. We're going to take a look at rules. We're going to talk a lot about patterns. We're going to focus on giving ourselves the absolute best of the best so that we can become professional day traders. This is your year, guys. We're going to be looking to be consistent, and that's exactly what we're going to look for. So, my name's Mark Novak. I teach every morning from 9 a.m. to noon Eastern time frame. I'm excited to be here today. I'm going to put a couple things in the room for you right now, just so that when we circle back, you guys have them. I'm putting a little bit of an example plan in there and also a checklist so that you can understand what you're looking for when you're taking that best of the best trade that we talk about today. If you don't have those yet, feel free to download them. If you have questions about them, we're going to talk about them all day long. But before we do anything, guys, I always go to forexfactory.com/calendar. And I like to make sure that I'm not trading directly into news. There are news releases that can move the market, can make it act a little erratic. And I want to make sure that I'm not jumping in front of that. Today, Tuesday, January 3rd, at 9:45 a.m., we're going to have the final manufacturing PMI. At 10 a.m., construction spending. These are both low impact. It means that the probability of them moving the market goes down, but it doesn't mean that it won't. Understanding where the news is when it's happening, not necessarily focusing on what's said, but rather understanding that there may be people with some deep pockets that have a reaction to that news, whether it's favorable or not favorable, but it can make the market jump, spike, you can get slipped. So it's a good idea just to know when that's happening. And then everything that I talk about each and every day is going to come from the nexgen-t3.com website. This is the education page, first tab on there. And this is going to be where anything and everything that I talk about comes from. Like to start off, software user guide. Software user guide is your NinjaTrader how-to. If you're brand new to Nexgen, to NinjaTrader, this is a great one to run through, make sure that you're in a good spot with it. And it starts with screen capture programs, making sure that you can take a picture, making sure that you can get that picture into the classroom. It's an important part of what we do, and that's where a lot of the education comes from, is you being able to take that picture. Let's see if that comes up on this screen. Taking a picture of your charts, being able to write your rules on the charts, making sure that each and everything that you see that's happening can be expressed to me so that we can give you feedback. I can give you feedback each and every day on what you're doing. So if you find yourself in a position where you're uncomfortable taking pictures, if you're not 100% on board with understanding how to upload that to Screencast, raise your hand. I will definitely go over it. I believe that's probably one of the most important parts of the education. Daily computer preparation for high performance, troubleshooting your NinjaTrader, connecting to your live account, opening, closing workspaces, applying templates. There's a section on building charts, moving those dots over the market flow. Really anything that you need regarding using NinjaTrader with the software is available to you in the software user guide. So go through there, take a look. If you have any questions, let me know. And then we go to the T3 Fibs ProTrader indicator tutorials. This is where the magic happens, guys. Everything that I talk about comes from this page. There really are no secrets. Hey, Jim K, nice to see you. And it starts off with the introduction. If you're brand new to Nexgen, of course, go through this introduction, take a look, watch the video, lets you know a little bit about what we're looking at. And then what we're going to do in this classroom is we're going to focus on the best of the best. I spend my first 45 minutes or so really focusing on the highest probability trend trade. And this is in the section first 30 days and beyond, consistent winning trades. Focusing on the 5-1 trend trades that happen after a termination condition. This is your high probability trade. And if you spend the first 30 days focusing on a high probability trade, and that's defined as when each indicator on every chart agrees with the rules for the trade, all your triggers are the strongest, no termination conditions exist, no trouble spots between you and your target. Guys, this is the one that's going to set you off, that's going to give you that confidence as you learn the software, because this is a trade that typically wins 70 to 80% of the time when you follow the rules. But it's not the winning that we're looking for in the beginning. It's not that P&L on a simulator. What happens is when you focus on this high probability trend trade, when you give yourselves all of these advantages, it's going to teach you to read your indicators. And chart reading is 90% of what we do. You're going to sit in front of your computer, you're going to open up your workspaces, and you're just going to read your charts. And chart reading focuses on three main factors. Tripping over my words, excuse me. Three main factors, and that's going to be these essential elements: where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. Your first 30 days of focusing on high probability trend trades is going to help you recognize these concepts and being able to use where the market is likely to continue for an entry, being able to use where the market is likely to go for targets, and where the market is likely to stop as a termination condition. And these are areas that have the potential to end the trend. So 30 days focused on the best of the best. Those lessons are going to teach you to read your charts. And then guys, from there, that's where what you do with the software is entirely, it's limitless. Because once you get past that high probability trade, once you understand it, you understand the key concepts, that high probability trade allows you to read your charts. It opens the door for these medium probability trades. And this is when most indicators line up for a trade. Your ability to read your charts is going to let you know when something's not lining up. A small issue exists, and it should be a small issue, not several issues. And this is going to be the vast majority of your trades. And when you're executing medium probability trades, you're going to take the trades and you're going to manage them assertively. And you're going to be able to manage these trades assertively because of your ability to read your charts. If there's trouble in your way, you'll be able to identify it through chart reading. You may take a portion of the position off at that trouble spot and reduce your risk to a zero loss level. So we're going to focus on the high probability for the first 30 days. We're going to teach ourselves, we're going to learn to read our charts, and then we're going to work into that medium probability trade. And the whole idea for your first 30 days, and I can't say this enough, is keep it simple. Allow it to be simple. Allow yourself to be new. We're going to walk before we run. Remember that this is not a sprint. This is a marathon. You're learning a profession that has the potential to make you millions of dollars a year. So we're going to give it everything that we have, and don't be in a hurry. Ask a lot of questions, practice, study. We're going to get to where you want to be. So these three rules, high probability trend trade, only three rules. And these three rules happen on two charts. Let me get my picture over here. 3 rules on 2 charts. And when we look at the 2 charts, I'm going to start reading on the 13.2. When you open up your workspace, you're going to see the 13.2 and you're going to see the 5.1. And we're going to use these two together. Symbiotic relationship to understand when the rules are met. On the 13.2, we're going to use the most current bar. You'll notice that I have a couple arrows drawn in right here. We're going to use the most current bar on the 13.2 to understand first the trend of the market. If the background is green on your 13.2, the trend is up, and you should only be looking for rules to be met for high probability trend trades long. If the background on the 13.2 is red, we're in a downtrend, and you should only be looking for rules to be met for high probability trend trades down. Focus on trading with the trend. Keep it easy, keep it effortless, give yourself that advantage. Next on the 13.2, rule number 1 for the high probability trend trade, we're going to make sure that we have strong triggers. We're going to be able to gauge the overall momentum of the market on the 13.2. And once we have that momentum, we go to rule number 2, and rule number 2 says don't trade into termination conditions. Remember, we talked about your chart reading is going to help you identify where the market is likely to stop. Rule number 2 keeps you from trading directly into these areas. Not only do these rules give you advantages, they also let you identify when you're giving those advantages away. So when you have strong triggers, when you have no termination conditions, you're going to take this 13.2, this broad stroke of the brush, letting you know that the conditions are right, and then you're going to come to your 5.1 chart only after these rules are met. This is your entry chart. And here you're going to refine that broad stroke of a brush. You're going to pinpoint your area of entry, and that's going to be that area where the market is likely to continue. And this is where rule number 3 of 3 happens for a high probability trend trade, where you're going to use a limit order to buy or sell a pullback to an area inside of favorable large triggers. By using this setup, by getting the general temperature of the market, the broad stroke on the 13.2, by refining it to the area where it's likely to continue on the 5.1, it's going to allow you to reduce risk and maximize your profit potential. So 3 rules on 2 charts. And I'm going to share this picture with you because this picture kind of puts it all together. These are your 3 rules, simplified. Rule number 1 says you must have strong triggers. Rule number 2 says no termination conditions. And don't worry, we're going to talk about each and every one of these in great detail. And rule number 3 says use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Your rules provide advantages. Rule number 1, strong triggers, provides the advantage of momentum. Rule number 2, no termination conditions, gives you the advantage of a clear path. And rule number 3, by using that limit order, by waiting for the market to come to you to buy or sell a pullback at an area, this is going to give you the advantage of entering the market where it's likely to continue. So as you approach learning this high probability trend trade, I want you to understand the advantages that your rules provide you. It should give you a little bit of confidence as you get into the trade, but I also want you to understand the advantages that you give away if you make the choice to break your rules, because the two go hand in hand. Got my monitor on the other side today. It's throwing me off a little bit. I apologize if it seems like I stutter a little. So 3 rules, 2 charts. Let's go through each rule. If you have a question when I talk about a rule, if there's something, maybe a concept that you're not getting, you need a little clarity, I really want you to raise your hand. It's okay to post in the room, hey Mark, I'm just not sure what you mean here. Let's talk about it a little bit more. Because the one thing that I have to assure each and every one of you that's in this room is this is your classroom. I understand these concepts. I'm good with them. I don't want this to be a lecture. I like it to be a discussion. So rule number 1 on the 13.2 chart tells us that we must have strong triggers. What is a strong trigger on the 13.2? Well, in an uptrend, when my background is green, my small triggers should be located above the large triggers. The large trigger should be widening, angled in the direction of the trend. And it's this space created between the small and the large that lets me know that the odds are favorable for the market to continue up. In a downtrend, small trigger lines break below the large are widening, they're angled in the direction of the trend. It's that space created between the small and the large that lets me know that the odds are favorable for the market to continue down. So when I talk about the advantage that Rule 1 provides, that advantage is odds favorable momentum. You're trading in a market with so much momentum that that trend is likely to continue. In the beginning, as you focus on that high probability trend trade, you're going to commit to this look from start to finish, making sure that you always have that advantage. Because when those small trigger lines work their way inside of the large trigger lines, we call this a weakening of the large triggers, and anything can happen up or down. So rule number 1, the advantage of odds favorable momentum. In an uptrend, you'll recognize that advantage isn't present for the duration. Small triggers accelerate away from the large. The large are wide, they're angled. You can see those small triggers break away. Momentum is at its strongest until they return. This is the path. This is where you're looking for those high probability trend trades. When you're looking at your 13.2, you're scrolling back, you're going through historically, you'll notice that there's these tails or these wicks where price goes lower than the middle point of the bar. These, if you get in the habit of circling these, you're going to begin to recognize where potential entries are happening. Right now, we're only looking for that odds favorable from start to finish. You see it on an uptrend. Go in the other direction, it's the same concept. The small trigger lines accelerate away from the large. That space is created. These circles represent the potential opportunities during odds favorable momentum. So guys, that's rule number 1. Giving yourself the advantage of momentum, making sure that you have strong trigger lines each and every time you take a trade. Do me a favor, if you're new with me, if you're following along, give me a why in the room. Let me know that you're comfortable with the concept. If you'd like to talk about it a little more, I'm more than happy to. Thank you, Alyssa. Guys, this simple advantage of momentum really makes things easier. Next, rule number 2 says no termination conditions should exist. Termination conditions. Remember, our chart reading lets us know that termination conditions are an area where the market is likely to stop. So, if we put that definition, it's a Fibonacci-based indicator that may reverse the market. And that word may is important. It's not guaranteed to reverse the market, but when a termination condition is reached, we have given away the advantage of a clear path. And we determine these termination conditions based on a comparison of that area and those same trigger lines that identify momentum. And the areas can be blue Fibonacci support, they can be red Fibonacci resistance, yellow 1-to-1 dots. They can also be a cyan divergence low line, or a magenta divergence high line, or even a large chart midband if the large triggers are a full bar away. And then remember, these are happening on the 13.2. There's also one, any third divergence in the same area. Guys, this is a potential trend stopper. You'll see this not only on your larger, slower charts, but you may also see it on your 5-1. And this is going to be an opportunity for you to recognize change as change is happening in the market. And I'll show you how. But first, let's go through identifying a termination condition. 2 simple things have to happen. Let me pull up my picture. 2 things have to happen. Price reaches an area, meaning that these price bars come down, reach that area of Fibonacci support. That is the first half of the recipe for identifying a termination condition. Price reaches an area. When price reaches an area, we're going to turn to our T3 trigger lines, and we're just going to ask ourselves, where are my triggers? If support is reached and the trigger lines remain above, This is an area likely to stop the market. This is a termination condition, and there's no more shots at a short trade. Go to my picture here. You see it as well up top. Price reaches the area of support. None of the trigger lines break through. This is an area likely to stop the market. We're not looking for short trades. Rule number 2 tells us, let an area break before taking trades in the established direction. Well, when is an area broken? This area of support is considered broken when both the small and the large triggers make it through. So smalls are through, large are through. We can begin looking for those high probability trend trades again if we have odds favorable momentum. No trigger lines break through. No short trades to be had. No trigger lines break through. No short trades to be had. Remember, guys, we're looking at the highest probability trade. We're looking at giving ourselves the absolute best of the best for the first 30 days as we learn to read our indicators. There's going to be a look that you're going to see all the time. And this is going to be your first taste of a medium probability trade. When an area hasn't broken yet, but it has the potential. When the small trigger lines break through this area of support, and guys, this is the key right here, with odds favorable momentum, this is what we call a 50-50 look. 50% of your trigger lines have broken through, 50% of your trigger lines have not. This is an area with the potential to break but hasn't broken. If your entry conditions, when we talk about our entry conditions on the 5-1, if they're perfect, then we can look for one shot at a medium probability trade. And this will be the first one that most new users take. We'll talk about it throughout the day. But in the beginning, you're either going to have an area that hasn't broken and you won't be looking for trades, or you'll have an area that is completely broken and you'll continue looking for trades. And you're going to see these all day long. Price reaches resistance. Where are your trigger lines? Well, your trigger lines remain below that area of resistance because they have no long trades. You've reached an area likely to stop the market. From that area of resistance, you can see that price comes all the way back down to support. And when support is reached, you ask yourself, where are the trigger lines? The trigger lines remain above support. Therefore, support is likely to stop the market. It may reverse the market. We've given away the advantage of a clear path. We're not looking for short trades. Can't go long into resistance, likely to stop the market. You can't go short into support, likely to stop the market. 90% of what we do is waiting for our rules to be met, reading our charts, waiting for the advantages that give us the highest chance of success. Price comes all the way back up to resistance. You'll notice that it reaches two areas of resistance as well as a magenta divergence high. Your trigger lines remain below all of these areas. Guys, this is what we call a pivot stop out. When price exceeds the previous pivot, here's your pivot with divergence. Price exceeds, trigger lines don't follow, and then we get a full reversal. Those large triggers go from green to red. We end up with odds favorable momentum. This is a pivot stop out. This is a termination condition that creates a full reversal. This is what we call a strong top. When a termination condition creates a full reversal, gives us odds favorable momentum, this is a strong top. And if you look at your first 30 days, if you look at your first 30 days, the best of the best, 5-1 trend trades that happen after a termination condition on the 13-2 is your best chance. So we go through, price reaches support, market may stop, no short trades. Price reaches resistance, no long trades. Creates a full reversal with odds favorable momentum. We call this a strong top. Price reaches the 1-to-1s. Where are your triggers? Well, your trigger lines remain above. This is a termination condition. It may reverse the market. It does reverse the market. and it gives us odds favorable momentum. There's one of those circles on the tail. This is a strong bottom. So when we define strong tops and bottoms, it's a termination condition that creates a full reversal. And that's your best chance of success. And you'll notice that there it is right there. So this is utilizing areas as a termination condition. Do me a favor, if you're following along, especially if you're brand new, let me know that you're with me. Two-step process. Give me a Y in the room if you understand. Price reaches an area, these one-to-ones. Where are your trigger lines? If they remain above that area of support is acting as a termination condition. No more short trades. Price reaches the area of resistance. Where are your trigger lines? They all remain below. No more long trades. Absolutely. McComas, good morning. Nice to see you. So when we talk about the circles, initially all you're seeing, let me scroll to the picture, is when you have odds favorable momentum, McComas, and this is, notice how this is after the fact. The market has gone from 8:38 probably up to 10 a.m. If we go back, the YouTube has audio but a black screen. Uh-oh, thank you for that, Claire. I just rebooted the stream on there. Tell you what, I'm going to send John a note. Claire, thank you for that. Are you able to see it in the room right now? I don't think we've hit capacity, have we? You guys are okay? Claire, can you see? Okay, good. Thank you for that heads up, though. I'm going to get John on that. He's my tech guy. It's probably my fault I set these up today. You can't see in the room. Okay. So, McComas, when we talk about the circle, all this circle is a potential entry for the high probability trend trade. And we're about to talk about entries, and it's going to put it all together for you. Before I do that, though, I want to talk about one more termination condition. Sometimes price seems to reverse from the middle of nowhere. Sometimes you get a pivot that doesn't come from an area. And when you get that happening, this final termination condition helps you identify it by using a smaller, faster chart. By using that 5-1 chart, you can see that change happening. And we're going to use 3 divergence in the same price range, and it may terminate the trend. Divergence is simply a loss of momentum. Whenever a negative number prints, whenever that cyan line prints from a low, that magenta prints from a high, we have losses of momentum. So when it happens 3 times in the same price range, it may terminate the trend. It becomes even more powerful when the small trigger lines are inside of the large at that 3rd divergence. 3 losses of momentum, and you'll notice that we go from odds favorable to anything can happen. It becomes even more powerful still when that 3rd divergence is higher than the previous pivot from a low or lower than the previous pivot from a high. So if you're following these 3 divergence, you recognize them on your 5-1, it's going to help you identify that change happening on the 13-2. It's also going to help you as you begin to take those medium probability trades because you have to manage assertively. If you take an entry and you're in a trade and these 3 divergences print, it gives you an opportunity to recognize that change, to manage out of the trade. So far, odds favorable momentum, the advantage of a market that is likely to continue in the direction of the trend. We couple that with making sure that we have the advantage of a clear path, identifying these termination conditions by recognizing when price reaches an area and none of the trigger lines break through. And then McComas, here's where these circles come in. Rule number 3 says that we're going to use a limit order, meaning that we're going to wait for the market to come to us. We're going to have the patience because we have pinpointed that area where the market is likely to continue. And we're going to use a limit order to buy or sell a pullback. And that pullback is just a small retracement in price counter to the underlying trend. And we're going to let that pullback come to an area inside a favorable large trigger. So rule number 3 will give us the advantage of recognizing where the market is likely to continue and taking our entry there. And during the live market, when rules 1 and 2 are met, when we have those strong triggers, when there's nothing in the way, this will be the look of your 5-1, and this is when you make the decision. It's time to take a trade. Rules 1 and 2 are met, and you're going to focus your attention on the 5-1 large triggers. If they're up, you're going to look for areas of support inside. This is an uptrend. Areas can be fibs, mid-bands, or 1-to-1s. This is going to be your area to watch. There's nothing to do yet. You're only watching the market because rules 1 and 2 are met. Rule 3 says that we are going to buy a pullback in this uptrend, meaning that with everything going up, we're going to wait for a reversal bar. You're going to wait for that market to come down to you. And when that reversal bar prints on your 5-1, you're going to focus on your entry areas. You're going to create your window of opportunity. And your window of opportunity is from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. Meaning that from this mid-band down to these 1-to-1s, this is where the market is likely to continue. This is your window of opportunity. Our job, because we have the advantage of odds favorable momentum, because we have the advantage of a clear path, and now because we have the advantage of identifying where the market is likely to continue, I'm going to right click at the top of this window and I'm going to activate my limit order with the hopes that this retracement pulls all the way back to my entry area. And if it does, I'm now in a long trade right there at 79.21. I'm in at the mid-band. I'm in at the area where the market is likely to continue. And why do I choose the top of the window? Because on my 13.2, on that broad stroke of a brush, I have odds favorable momentum. I'm not looking for it to pull down super low because the 13.2 says that we are a freight train of momentum to the upside. I'm in at 79.21 at the top of the window, and my protective stop is going to go down here where the market shouldn't go. It's typically 12 to 14 ticks. I'm going to go below that window of opportunity. And guys, I will take this trade 1,000 out of 1,000 times. Because 70 to 80% of the time on a high probability trend trade, this is your result. Profit target reached. Once the market moves in the direction of the trend, I can move my protective stop from that window below the window of opportunity to below the reversal bar, reducing my risk. Because I waited for the market to come back to that best of the best area, I've increased my profit potential. So we kind of tie it all together here. And the first thing is just waiting for the advantages. Waiting for strong triggers, for no termination conditions, using that limit order to buy or sell a pullback at the area inside of favorable large triggers. This is your best of the best. And it provides me the advantage of momentum, the advantage of a clear path, and the advantage of an entry where the market is likely to continue. If you focus 30 days on this high probability trend trade, you're going to be able to identify these conditions. You're going to be able to understand a little bit more on your chart reading. And you're going to be able to go back and study. And guys, this is the key. And McComas, here's your answer on the circle. You're going to be able to go back and study these advantages. You're going to be able to go back and recognize when that high probability trend trade has come to fruition. Starting on the 13.2, and I want you to see, this has already happened. We're scrolling back. We're after the fact. If I have odds favorable momentum and I have no termination conditions on the 13.2, Makamas, are you with me? And I see one of these tails, I'm going to circle the tail. Why am I circling that tail? Because if that tail, that circle, lines up with an area of support inside of favorable large triggers, I know that my rules are met. I know that my rules for a high probability trend trade have come together. Did I have odds favorable momentum? Guys, this is that checklist that I put in the room. Absolutely I did. Did I have no termination conditions? There were none present. And did I have an area for entry inside of favorable large triggers? Absolutely. Guys, this is your best of the best, your high probability trend trade. So Makamas, what we can do is we can go back. Let's pull up a live chart. And we're going to look for areas where we had odds favorable momentum. Let's find one where there's absolutely no termination conditions. And if we see a tail, we'll circle it. So we come back, looks like there was a pretty big run down there. I see a tail and I circle it. And guys, all I'm doing right now is building a little confidence. All I'm doing right now is recognizing the advantages, circling the tail on the 13.2. Rules 1 and 2 met. So guys, give me a Y in the room. Rules 1 and 2 have been met. Every place where I have circled, I have odds favorable. I have a clear path. If you're brand new with me, this is your job for the next, I don't know, at least while you're on demo for the next 30 days, 60 days. Do this every day. Look at the opportunities that have come through. So I've got my circles, and now I'm going to open up a 5-1. And I'm going to look for my first circle. What is this teaching me? Well, it's teaching me to be patient because these circles don't happen every second of every day. Here's a pullback directly to support inside of favorable large triggers. There's actually another one that pulls a little bit lower there. But I can say absolutely, rules were met for a high probability trend trade. As I scroll back a little further, market pulls back directly to resistance. This time it's 1-to-1s, right inside of those favorable large triggers, and the market continues down to the next key area. I begin to put these together, and guys, this was 5:55 a.m. It took a while to get back to that best of the best. But there is a termination condition that creates a full reversal, that gives me odds favorable momentum, that gives me a pullback to an area inside of favorable large triggers. Makamas, does that help a little bit? When the rules are met, you circle the tail. When you circle the tail, if it ends up following the rules for an entry, guys, this is the best way to study. If you scroll back 10 days and you find every opportunity, two things should happen. One, your recognition should begin to get pretty outstanding because you're just teaching your body to recognize what the conditions look like. Odds favorable. There's a termination condition. Nothing in the way. Look at that entry. This is perfect. The next thing you're doing when you do this is you're convincing yourself that it's okay to be patient because those best of the best entries don't happen 100% all the time throughout the day. But what you'll realize is that if you're patient, and you wait for the best of the best, guys, your entry here was at 92. The market really didn't even slow down until 02. That's 10 points per contract on the S&P. You're developing patience. You're developing recognition. What you're also doing is you are putting yourself in a position to understand how to study. So when the day is over and you've done your trades and you've done what you're going to do, you've posted in the room for feedback, you can scroll back on that 13.2 and see if you missed any opportunities. Or you can scroll back on that 13.2 and police yourself a little bit and see if there was something that you should have caught or maybe you shouldn't have taken. Guys, price reaches an area of resistance, these 1-to-1s. All of your trigger lines have remained below. Do we recognize this as a potential termination condition, an area likely to stop the market? Give me a Y in the room if you're with me. Price reached the 1-to-1s. All of the trigger lines remain below. Not looking for a high probability trend trade here, guys. The rules aren't met. It may go up. It may go up and never stop. But what we've done is we've given away the advantage of a clear path. And our rules say let the area break before continuing to trade in the established direction. We never got back to that area of support inside, but now we have smalls above the large, right? Small and large triggers have both broken through that area. Larger outside, smaller outside of the large. Now if we get a reversal bar, we can create a limit order at the area of support inside of favorable large triggers. Give me a Y in the room. Do you see it? Smalls above the large, haven't reached the termination condition. We haven't gotten our reversal bar yet, but I can identify my area of support inside of favorable large triggers. And guys, it makes it to the fib. This is what we're going to do each and every day for the rest of your life, is we're going to get great at recognition. This is crude oil. Fibs hold, support holds. There's the smalls below the large and everything's breaking through. What did that look like? Well, that looked exactly like a pullback to an area of resistance inside of favorable large triggers. So guys, this is the first 45 minutes. You survived it. You made it through. All we've done so far is we've talked about the best of the best. So put yourself in the situation where you have recognition. You understand the advantage of momentum. If you don't, raise your hand. I can't see you. We have the advantage of being able to recognize where the market is likely to stop. Guys, I tell you that the deep pockets, the institutional traders, they know where these areas too. These are where the fights happen. And we've made it so you can identify the area of support or resistance inside of favorable large triggers, looking for that opportunity for entry. And now you're able to study it each and every day to go through and recognize. We focus on this first 30 days, guys, because the win percentage creates confidence. It creates confidence through the memory of success. Committing to this look, understanding the look, giving yourself the best of the best advantage. Guys, this is your first 30 days. We're going to learn to read charts together. We're also going to use this first 30 days to write a very simple plan. And I just put three attachments for you right here in the room. If you look in the chat dialog, I put in, whoops, I think I just downloaded it. That's not what I wanted to do. I'm going to show you what I put in here. We're going to talk about how to use them. The first thing that I put in there was an example of a trading plan, focusing on the high probability trend trade We're going to talk about this one right now. I've put in a copy of a high probability trend trade checklist so that you can print this out so you can put it on your desktop, and each and every time you look to take a trade, you can police yourself a little bit. You can write these rules on the chart. And then finally, I've put in a high probability trend trade checklist that takes the exact same pictures from the training manual, from the tutorial section, and identifies the look associated with each rule. Guys, this is a great one. As you learn to study, as you go through, as you check yourself, this is going to allow you to police yourself pretty effectively. So we've got trend trade checklist with pictures, trend trade checklist, print this out, put it on your desktop. And then finally, guys, this is an example of how to write your plan. And all a trading plan is just telling yourself, this is what it's going to take to get me into a trade. This is just focusing on my entry. I want you to use the phrase my trade is. My trade is the high probability trend trade. For the first 30 days, I'm looking for the best of the best. A week in, I'm going to be able to nail this entry. I'm going to hit this entry without hesitation. I can't guarantee it because everybody's different, but I tell you, my experience is that people tend to recognize their entries within the first 3 to 4 days. You're going to make mistakes because you're human. Allow yourself to be. But in order to enter this trade, I must have the conditions of the checklist met. Put that checklist in there, or guys, steal this plan and make it yours. Use your voice, my trade. I must have odds favorable momentum. I must have no termination conditions. And I must have an area for entry inside of favorable large triggers. Pretty simple. If you check yes on each of these, the odds are favorable that you're going to win 70 to 80% of the time. And then it's important to take pictures. We talked about taking pictures. Take pictures of each and every trade that you take. And then when you take pictures of each and every trade that you take, put a few of them into your plan so that in one-stop shopping on one page, I can click the link. What does my best of the best trade look like? Well, if I click that link, it brings me right to the picture of odds favorable momentum. It brings me right to the picture of no termination conditions and that beautiful pullback to an area of resistance inside of favorable large triggers. This is my absolute best of the best, and I believe in this look so much that I've put a picture of it. Whoops. Put a picture of it in my example plan. Put 2 or 3, put a long, put a short. Make sure you understand exactly what it is that you're looking for. As your plan grows, as you work that 50-50 trade into it, same thing. You must write your rules in order to enter the trade on that 50-50 where an area has the potential to break. No divergence should be present on the 5-1. Small triggers must be outside of the large for that perfect entry. Guys, I love pictures. So when I talk about a 50-50 trade, this is my perfect entry. Strong triggers, no divergence, small window of opportunity where the large and synthetics are one on top of the other. I have this picture so that I know exactly what it takes. And I'm going to put a picture of my 50-50 entry into my plan. Let's see what this picture looks like. Smalls are through, large are not. Area has the potential to break. No divergence. Strong triggers. Small window of opportunity. My plan says that I can take this trade. When this divergence prints, this is no longer my trade. And you can see what happens. There's a reason why. The rules are designed to provide advantages. So as you develop your recognition, as you begin to get into this, guys, I want you to take a minute and just either steal this plan and commit to it in the beginning. This is the beginner's guide to Nexgen, giving you the best of the best. And all you're focusing on is your entry point, getting to a point where you can recognize how to get into the market each and every time. Once you learn your entries, here's the second half of being a day trader. is you're going to have to learn to manage it. You need to clearly define your management plan the exact same way you clearly defined your entries. On this example plan, I have given you the most basic, remedial, easiest, no thought, opinion, emotion, straightforward approach to management. And it says that I will trade 2 contracts, and my initial stop will be 12 ticks put into NinjaTrader, and I will adjust that stop above or below the window of opportunity. So my first stop movement in a trade after I take that perfect entry is only to move my stop outside of the window of opportunity. It's mechanical. There is no opinion because we can identify that window of opportunity. It will be moved 2 ticks above or below the reversal bar in the direction of my trade. So just like from the manual, when that begins to move in the direction of the trade, I mechanically, without emotion, without opinion, move my stop 2 ticks below this reversal bar. I'll take profits at $100 on my first contract. Zero emotion involved. I'm just getting out at $100, and I'll move my stop to break even. Which means that in a $200 move, my second target will be $200. And $200 of movement, I'm looking to capture $300. Once $100 is reached, I exit one contract and I go to break even. And guys, in the beginning, you're going to have an awful lot of trades that are $100 profit and break even. And that's okay. This is how you begin to learn management. And what you're going to do, let me put this over here real quick, and I want you guys to see this. From the tutorial page, I'm going to show you 2 things. The first thing, this is right here. Step-by-step path to becoming a confident trader. Post your trades in class. Take your pictures of everything you do. Annotate your charts. And then track your performance in the spreadsheet. And that spreadsheet's provided by Nexgen. If you're brand new, it's in your Nexgen Study Picks folder. This spreadsheet, here's a link just in case you need it. This is your trade diary. This is anything and everything that you do in the market coming through and making sure. The first tab, this is where you track all of your trades. Now I'm going to pull up mine so that you can see it. Every time I take a trade, I annotate a chart. Remember, when we're talking about annotating charts, we're taking pictures of both the 13.2 and the 5.1. We're taking pictures and annotating our rules, odds favorable momentum, and no termination conditions. We're showing our entry and describing our rules, validating, verifying, learning our rules. You can talk about your targets. And guys, this is a big one. How do you feel? Were you confident? Were you anxious? Tell me how you felt, because the way you feel getting into a trade tells a lot about your trust of the rules. So everything you do, you're going to take a picture, you're going to put it in here. Every time your rules are met 100%, guys, this is your personal trade setups. And if I go to the spreadsheet here, it's empty when you get it. So every time your rules are met, take a picture. Put it into your personal trade setups. If you look at my spreadsheet, I have 82 pictures of high probability trend trades. This is my study guide. This is my repetition. This is what creates the confidence and the trust in the rules that keeps me taking the trades without emotion. As I begin to work on management, initially it's very mechanical. I take those pictures of the best, and then if there's something that helps me hold longer, if there's something that helps me manage assertively, I take that picture and I put it into my management things. As I begin to recognize patterns, I may have a chart reading section. Understanding termination conditions, there's a whole section there. But for the new user, it's empty. This is up to you to fill it up. Present these pictures in class. Let's talk about them. Let's make sure that you're seeing things the way you want to see it. And then, just to help out a little bit, you get a portion of my spreadsheet, guys. This is almost 70 high probability trend trades, things for you to study. But the most important thing that you can do, and I can't stress this enough, guys, is every time you take a trade, and even if you don't take a trade, every time you look at a chart, watch this. Let's take a picture of crude oil. Annotate it, because the more that you write on your charts, the more you're going to understand through repetition. Price reaches an area. No triggers through. This is a termination condition. So now what we're doing is we're kind of reinforcing those termination conditions. We also had one down here, didn't we? We can see Fibonacci support. We can see odds favorable. You can come through and you can begin to identify. Even if there's no trade, you can use that chart reading and get in the habit. Every time you open a chart, what do I see? Well, I see trigger lines have made it through. I see that I have anything can happen triggers. I see that I have room to the next Fibonacci area. This would be one of those medium probability trades. A small issue exists. But if you go through, if you decided to take a trade, one of the most powerful pictures you can take, guys, is a pre-trade setup. And I'm not saying that this is a trade. This is just a lesson here. I'm going to cancel that. But if I use that checklist, I can go through it. Is the market coming from a good top or bottom? Was there a termination condition that creates a full reversal? Absolutely there was. My checklist is 1 for 1. Do I have odds favorable momentum? Do I have small triggers outside of the large? Now I'm policing myself before that potential entry. I don't have that odds favorable momentum. There are no termination conditions and there are areas, but what I'm doing is if I am committed 100% to taking the best of the best in the beginning, then this no on my checklist should be enough to keep me out of this trade. This is not a high probability trend trade. What it is a medium probability trend trade. My small issue that exists is that these triggers aren't wide and outside. Let's see what happens. We get a loss of momentum. Didn't have the advantage of momentum. Now our triggers are against us. Rule number 1 wasn't met, and so far it's done wonders to help keep us out of the trade when maybe that trade isn't doing everything that it should. I've given away the advantage of momentum. Hey guys, this is going to be it for the next 30 days. There we go. Rule number 1 keeps us safe. We avoid the loser. If you do this every time, you're going to develop trust in your rules. And you're going to say to yourself, man, I didn't have the advantage of momentum. Because I didn't get in at this mid-band. I didn't get in at this support. Because I didn't take a loser here. And you'll play through this each and every time. This is what I see. This is what it means. These are my rules. Are they met? So guys, that's the end of the first hour here. Give me a Y in the room if you're with me. Let's spend 30 days keeping it simple. If you're brand new, if you're day 1, day 2, guys, I realize this is like, it feels like you're taking a sip of water straight out of a fire hose, right? If you commit to keeping it simple in the beginning, focus on that odds favorable momentum, focusing on not having any termination conditions, and then focusing on recognition of the absolute best of the best entry. And guys, here's the most important thing. When the rules are met, what you're going to do is you're going to build a tremendous amount of confidence And that confidence is going to take you to the next level. There's no doubt in my mind. I've seen it 1,000 times. Guys, I'm going to take a few minutes. I'm going to go refill my water real quick. See my pictures, McComas? So let's do a quick little run. Let's show you guys some stuff. I'm going to come to the Discord. The Discord. It sounds funny, right? This is what it looks like when you guys enter Discord, doesn't it? You got the welcome, all of these great things. So here is a section of example trades. This is great because this isn't just high probability trend trades. For those of you that are going to be looking to get more out of the software, and there's a lot of people with an awful lot of years. Guys, these are all pictures. I know that's a super fast scroll from Nexgen users that are taking these great trades each and every day. And you're seeing them come from the traders chat area. This is where the owners come in, they post. You're going to see charts that look different than yours because there's people with experience that's beyond yours. You're going to see helpful tips on doing things. You're going to see the discussions that people have as they come through. There's an awful lot that you're going to see right here in the trader section. So Makamas, go through and take a look at that one. There's also chart reading. John Novak has created a chart reading section. Some of it's a little more advanced, but this is all reading the indicators. This is available to everybody all the time. There's a section on key concepts. There's the user guides, that tutorial section. There's the advanced chart reading. And then here we are in the educational room. There's your trading rules. So Makamas, all that is available to you. And then beyond that, when you look at the spreadsheet provided in the tutorial section where you fill in your favorites, there's all those client example trades. And you can look at each and every one of these. And this is in your spreadsheet when you download it. And guys, if you haven't downloaded a spreadsheet in a while, come back through, re-download this one, replace the one that you have. Get those pictures. And if you need to, because you have all your trades, just copy paste them, put them into your spreadsheet. But this lets you look at them. And what I'm doing through class, guys, is I'm building this list even further. I'm going through and I'm trying to create more and more opportunities for learning for you. So every now and then we'll update that spreadsheet again and you guys can take it. But I encourage people, if I click on one of your pictures and it's an absolutely perfect trend trade, whoop, looks like Alex's link broke. We'll check this one. Huh. It would appear that Screencast is having troubles right now. Here's your link. I just put the link right above you, Makamas. Do you see it? You can click that one and download it, or you can look in the Nexgen Study Picks folder on your computer. There'll be a copy of the spreadsheet in there as well. But this one, I just clicked the link right here, and it brings you to the Google document. From this Google document, you'll need to download it. So you'll need to go File, Download. Do you use Microsoft Excel, Makamas? Then you're going to want to use the Open Document format. And you'll click on that Open Document, and it'll download it. And then from here, you'll simply enable editing. And that's going to give you that open document. And then you're going to File and Save As and put it anywhere on your computer that you want to save it. And then one of the great things about Nexgen is all those instructions are going to be for you right here. And if you're using the open document format, let me find it. There is a link to using openoffice.org. and then that's going to give you the same functionality as the Microsoft. So if you're already using it, then you're good. So download that one. If you need help doing it, let me know. It's just file, download, and then save as, and then you'll have that spreadsheet. But if you get in the habit of using that, guys, when you look at the path to becoming confident, post in class every day. Everything you do, every question you have, every thought that crosses your brain that you're unclear, post in class. And then track your performance. Make sure that you're taking pictures, that you put them in class, that you put them in your spreadsheet, not only the trades that you take, because when you take pictures of trades, guys, you're going to recognize the patterns that are making you successful. But the most important thing that you're going to recognize, and this is kind of what I'm good at, is we're going to recognize patterns in you. If you always trade in determination conditions, we're going to identify it and we're going to work together to fix it. If you jump in too early, if you jump in too late, if you hold trades longer than you should, we're going to be able to identify each and everything that you have going on, and then we're going to be able to work together to help you correct and get you on the right path. And that's exactly what this room is for. 15 hours a week, 100%. It's, if you ask a question, you just got a private tutorial. You and I are talking one-on-one until your question's answered. So all of that is available right there. And again, if you need help with that, just let me know. And then guys, I'm going to leave you with the live market for a minute. We'll see what's going to happen. And I will come back in a moment after my water is full. We're going to get into the second hour, guys. The second hour is designed to answer specific questions that you may have. The second hour, even more importantly, is designed to look at the charts that you post. And when you post those charts, we're going to talk about them. We're going to talk about the rules. Don't be afraid to post pictures. Don't be afraid to ask questions. I'm going to go to that glossary of common terms and I'm going to paste this in the room. I'm going to encourage you to participate in your own education, guys. Ask a million questions. Don't be scared or intimidated. The nicest guy you're ever going to meet. And if you think it's trivial, if you're like, oh, I don't want to ask that question, that seems silly, guys, those are the questions that need to be asked, because I promise you there's 10 other people in the room that are wondering the same thing. So I need one of you to be brave enough to put it out there so that everybody gets their answers. Guys, here's your market. I'm going to take a break. I'll be back in just a few. All right, guys, let's get into that second hour. Kind of excited about the second hour. I love it. So let's see what we have. Just if we're looking at the market and what's gone on, what do we see? We see one of those 50-50 trades, right? Smalls have broken, large haven't. Does everyone recognize this? This is an area that has the potential to break, but hasn't yet. If you took a first pullback, no odds favorable, kind of a hanging out waiting area. And you'll see this at these key Fibonacci areas. It looks a little smoother on this larger, slower chart, but if you begin to look at the 5-1, you'll notice these fights. Buyers push it up, sellers try to push it down, buyers, sellers, they fight right at these key areas. And what they're doing is they're fighting for supremacy. They're taking profits, or maybe they're entering trades. I've got a second divergence on my 13.2. It's a little bit lower. We're just kind of in a holding pattern. We don't have odds favorable momentum yet. We don't have a clear path. So on crude oil, we're going to sit on our hands and we're just going to relax. And then if we come to the S&P, we see a termination condition. Market continues down. Termination condition, market continues down. And then right here, where our small trigger lines begin to break below the large trigger lines, you'll notice that there's a pullback directly to an area of resistance inside of favorable large triggers. We have odds favorable momentum again. We have not reached a termination condition. And if we had to pick a window of opportunity, guys, are you with me? There's an area of resistance inside of favorable large triggers on the 5-1. Our first reversal bar didn't get us back to it, so all we can do is wait. And our next Fibonacci area is down here at 38, 39, 87. So I'm constantly going through this. What do I see on my 13.2? I could even trade it just like this, right? Everything has to be on the 13.2 to look at the 5-1. I have smalls below the large. I have large wide. I have no termination conditions. Rules 1 and 2 were met, which means that I can open up my 5-1. And on my 5-1, I can look for an area of resistance inside of favorable large triggers in the event that I get a pullback. This is what I do nonstop all day. If I have these conditions met, where's my potential entry? What do my rules say each and every time? And remember, when we're talking about this, we're talking about a trade that typically wins between 70 and 80% of the time. What does that mean for us? That means that 20 to 30% of the time, we're going to allow the market to be wrong. All right, so let's go through some of the pictures that you guys have posted so far. I'm going to scroll through. Miss Alyssa, you gave us the first one today. Let's see what you did. You say the market is moving up with good momentum, odds favorable momentum. You have a 50-50, right? You have no termination condition. And then you come over and you look and you get a beautiful pullback to an area of support inside of favorable large triggers. It's a medium probability trade. The area has the potential to break, but it has not broken. You take a picture perfect entry, and then you have the opportunity to manage aggressively. Got your first target. Price isn't breaking through. You exit. Alyssa, beautiful trade. Very well executed. It's still a 50-50. And if you look at it, Alyssa, this area has the potential to break but has not. This area has the potential to break but has not. And the same thing here. When that divergence prints, it takes away a little bit of the advantage. And you'll notice it when you come back to that highest area, that 86.75. Now your smalls are below the large. Everything is below the area, and you've already had one loss of momentum. I think not hoping in this situation was a great move on your part. Thank you for posting. Edwin D. Edwin D had odds favorable momentum and no termination conditions, and he was waiting for the perfect entry at an area inside of favorable large triggers. Ed, I like everything about it. Great looking setup, great looking area to get in. Advantages present. It just didn't come get you. Rules met 100%. Great job not chasing. And that's it, guys. Sometimes it gets us and sometimes it doesn't. It's that patience. And that FOMO will get you, that fear of missing out. All right, and then we've got another one. Ed, what do you suppose went wrong on this one? This is why I'm a big fan of writing my rules. And let's just do it. Don't really have odds favorable momentum. It's a 50-50 trade, right? We still haven't quite broken the area. We've had a loss of momentum on a 50-50. Edge, you don't have an area inside of favorable large triggers, right? And then you also had divergence up top here. Ed, dollars to donuts. If you get in the habit of waiting for that market flow signal when it's not perfect, you're going to drop probably 50% of your losers. Just historically looking at that. If you're going to use that 8 range, use it. And I think that this is a big key. We start on 2 charts, right? Keep it easy, learn to read them. It's not a horrible look. But we had a little bit of information that told us that things weren't moving as fast as they should. And then guys, as you grow with the software, we'll introduce you to the 8 range chart. There's signals provided from these key areas that'll help you get in and out of the market. It's all right, Ed. We're going to shake it off and get to the next one, right? Smalls below the large, larger wide, angled in the direction of the trend. Edge, you have absolutely no termination conditions. You enter, that one missed you, so you hop back in, keep your stop where it shouldn't be. I like it. I'm not sure what happened on that one, but you hold it all the way down. Nice trade, Ed. Nice recovery. Isn't it pretty cool, though? The one that follows the rules perfect is the one that gets you back. And that's all we're doing is we're just developing trust in the rules, taking the best of the best. Bobby T, bottom wasn't really a strong bottom. I agree with you 100%. Didn't enter between your large triggers, but it worked. It certainly did. It did work. So Bobby T, I love that it worked. Is this something that's repeatable? And that's all I want you to recognize. There's a bad bottom, right? You've already reached the mid band. All of your trigger lines are below it. These trigger lines are still down. Sometimes we get lucky. Feels good to get lucky. And I think that the key concept is understanding that if you got lucky, understand that this isn't a high probability setup. I like it though. You didn't get greedy. You had momentum. You exited at the key areas. Maybe it is a good trade, Bobby, but it might not be your trade yet. And I think understanding whether or not you had all the advantages is important. Guys, here's one from the CEO. Strong triggers, no terminations, beautiful pivot stop out, and I believe he took that with a market flow signal. There's that confirmation. That confirmation gets him into the trade, and he's looking to go down to that next fib. John, I like that trade. That's a good looking trend trade. And then Yuri says, you know what? That's such a good looking trade. I'm going to show how John Novak's trade ended. Guys, nice trading there. This is it, isn't it? This is what we do each and every day. And I want you guys to see this. Remember I said that you should steal these, right? Let's put the checklist on it and see how Yuri did. Yuri knows he did all right because Yuri's been studying this. Termination condition creates a full reversal, which means that I have a good top. Odds favorable momentum without question. No termination conditions, 100% true. Area for entry inside of favorable large triggers. And look at this, guys. This one didn't make it to an area inside of favorable large triggers. But this one pulled back and nailed it. Absolutely picture perfect. This is a high probability trend trade, 100% rules met. I'm going to upload that to screencast. And I'm going to go to my favorite look section. And guys, I'm not afraid to admit it. I will steal your pictures all day long. And now I can come back and I can study that one again. Dimitri, let's see what you did. In a little low, right? Got a little scared that it was going to go without you. Pulls right back to the perfect entry. You recognize that. Make some money. Easy 5 points. Dimitri, nice trade. Who else is going to show me this trade, guys? So two things have to happen when this trade happens. And Dimitri, I'm going to disagree. I think this is the best look. Not the best entry, but absolutely the best look, isn't it? Odds favorable. No termination conditions. We're letting the 13-2 lead the way. And where does that entry happen? The best entry happens at the area of resistance inside of favorable large triggers. This is your recipe. I know that I've got some new names in the room today. Let me go back through. Who did I see in here? Appreciatin'? I love that name. That's a good one. Do you see what we did and how we did it? Awesome. And Claire, I know you're an owner, but I don't see you in here a whole lot. How do you feel about it? Are we good? King 789, I don't recognize that one. I hope you get it. I hope you see it. Michelle G, Happy New Year. NG Time, good to see you. Did you guys catch that one? Surgeon, Tyree, Waylon? Absolutely. No, I noticed that. I love that you did that. This is a great part. Dimitri, you annotated this chart beautifully. Sometimes we don't get in at the best spot, but if we identify it, we catch it next time. You ready, Michelle? This is your year. Rooting for you. Show me those trades every time they happen, right? Hey guys, there's that green box that we put on there a while back. Remember we said if I slide that box over, how did I know that was going to happen? I didn't. But I have a set of rules. that identify high probability situations. So what do we see right now, guys? Let's talk about it. I have small triggers. They're above the large triggers, right? We can say that's a pretty good look. My smalls are above this area. Notice how the large have stayed below. Do I have an area of support inside of favorable large triggers? I sure don't. If your rules are the high probability trend trade, have your rules been met on this trade? Give me a Y or an N in the room. Not yet. So can we start playing the if-then game? If those large triggers get above support, I love that. If those large triggers on my 5-1 roll and I get an area of support inside, well, then I can look for long trades, right? What's the other half of that, guys? If price goes down below support, if things roll, maybe I'll look the other direction. You guys know that everything that we do works on every time frame. It works on every market. We use the 13.2 and the 5.1 because it gives the most opportunities. I want to share with you guys my 21 chart. This is a larger, slower chart than the 13.2. 21.3 is in a downtrend. 21.3 is at that same termination condition everywhere. If nothing else, your ability to read your indicators tells you don't take short trades anymore, right? We're not looking for short trades. And they also let you know that it may be just a little premature for longs. Sorry, I just got a note. Let me see if I can fix the YouTube. Maybe not. You know what? If you're on YouTube and you can hear me, that's great. Come to Discord. You can see me. You can use YouTube for the audio, maybe. I'm going to get this fixed on my next break. My tech guy just sent me a message and said, hey, I'm on the wrong one. So let's see what we have going on, guys. A little bit of overrun on a key Fibonacci area. Great place, great target where the market is likely to go. I hope a lot of you caught that one. 3 divergences in the same location. 1, 2, 3. Small triggers inside the large triggers. Whoops, what did I do? Now I have an 8 range chart. Sorry guys, I'm going a little silly here. No rules met for an HVA trade just yet. So we're just at a holding pattern, aren't we? This may have been a little overrun. How do we know that? Because we had 3 divergences in the same location on the 5-1. Now our trigger lines have rolled. But it's still a 50-50. And there's divergence. And there's no support inside of favorable large triggers. It's not a high probability trend trade. But there's a lot that we can learn, right? Just through reading our indicators. And then what did crude oil do? They're just pushing. Any opportunities in there? Maybe not high probability trend trade opportunities there. Day after a pretty big break. Guys, notice how those large triggers never made it through? Divergence printed. Now what do we have? Now we have potentially one of those pivot stop outs. Now we have price reaches a cyan divergence low. Where are my triggers? All of my trigger lines remain above. No short trades. Now we have a termination condition. We'll see if it creates a full reversal. I love doing this because everything that we do is patterns. I want you to look at this picture from the current S&P. And guys, I'm going to pull up straight from the tutorial section. Does that look familiar? Price overruns the area a little bit, pushes up, comes back. Looks a lot like that. And it looks like we're getting the same result. As this is your lesson that everything that we do revolves around patterns. This picture is happening in the moment, right? And we can compare it to this picture from 2021. Do we see any similarities? Now we have odds favorable momentum again. Guys, it even printed the same divergence. There's a pivot stop out. These aren't odds favorable triggers, favorable large triggers. These are still flat. Does anyone else do this? Do you just read your indicators? What do I see? 90% of what we do is chart reading. I see a termination condition that's created a full reversal that's given me odds favorable momentum, but I don't have my entry conditions met. Give me a Y in the room if you see it, if you recognize it. Patience, guys, right? We're just waiting for the 5-1. Absolutely, Alyssa. You guys are worth the best of the best looks. So let's look at the other chart. Termination condition, isn't it? Guys, to the absolute tick. If I look at my 13-2 chart on crude oil, price pulls directly to a fib, right? Breaks through support, pulls back to resistance, finishes the move. Breaks through resistance, pulls back to support, finishes the move. It's all about patterns. Terminations, right back to resistance. Over and over again, guys, you have the ability to recognize the areas where the market is likely to continue. You have the ability to recognize areas where the market is likely to stop. And you have a set of rules that teaches you how to take advantage of them. S&P is doing what it does. I want you to recognize that this key area, guys, at this 30, 39, 87 Fibonacci area, I want to talk about who's in control. Because it's not us. We don't control the market. The sellers push this all the way down to support. Congratulations, if you're a rules-based trader using that high probability trend trade, you made a tremendous amount of money all the way down to support. But then the buyers fight back and they push, and the sellers try to push. They get right back to that key area. Notice that these divergence lines are the exact same. There's that head and shoulders pattern. The buyers push, the sellers fight. All of this happens at the key area. Buyers, sellers, buyers, sellers, buyers. Two types of people in the market, guys. There's sharks and remoras. The sharks are the big money investors. These are the people that control the moves. These are the people that establish tops and bottoms. These are the people that create momentum. These are the people that run over people like us if we try to be first, if we try to form an opinion, if we try to make a guess. The flip side of that is that when these guys establish momentum, when these guys give us tops and bottoms, we can be the remoras. We can be these little guys that take advantage of everything that the big guys do. We are remoras. The sharks create the fight. This is the frenzy. One of them's going to win. Our opportunity to be a remora was up here at the trend trade when the momentum was established, when the path was clear. And it was a great move. Strong triggers. Everything's above support, coming from a termination condition. Sometimes just a little bit of patience, right? If this area is going to hold, the triggers are going to roll. It's mathematical. I don't understand a lot of the math. But if it's really going to be a bottom, the triggers are going to roll. So what do we have now? We have odds favorable momentum. I have no termination conditions. It's pretty close to that mid band. If then, right? If my rules are met, I'll take a trade. I get the question all the time, hey Mark, is this a long? Hey Mark, is this a short? Hey Mark, what should I do here? Guys, I want you to change your mode of thinking for 2023. Every time you want to take a trade, I want you to ask yourself, are my rules met? Are my rules met for a high probability trend trade long? Are my rules met for a high probability trend trade short? If you're not 100% what your rules are, or if you don't have rules, oh, I sure hope you have rules. Let's write rules. Let's create entry conditions so that you know 100% what it's going to take to get you into a trade. Are my rules met? I have a termination condition that creates a full reversal. Am I coming from a strong bottom? Guys, give me a Y in the room. Or an N if you don't think that we are. Do we have a strong bottom in place? Termination condition creates a full reversal. Do we have odds favorable momentum? Are we free from termination conditions? One of the most effective tools I've found is when I have this conversation with myself. Every time I look at my charts, what do I see? I see a pivot stop out that creates a full reversal. I see odds favorable momentum. But I recognize that I'm trading directly into a mid-band and everything is below it. And I'm just looking. Gary, let's see what you did. Guys, I want you to notice Gary puts a checklist on every picture that he posts. No contra trades. Do you have a good top or bottom in place? Absolutely you do. Termination conditions on the 13.2? You do not. Do you have odds favorable momentum on the 13.2? You do. Area for entry inside of favorable large triggers. That one's a little iffy, Gary, because at the time of your entry, they're split and flat. But I see why you did what you did. Not favorable yet, but you took your entry right there at that high volume area. Jumped the gun just a little bit. But you did it well and you kept your stop in the right place, Gary. And I think that that's the key, is you knew then it may retest, right? Pull right back to support because those triggers are flat. You keep your stop in place, your 8 range triggers. I like it. I think it's a great trade, guys. This is the first opportunity at a long after a termination condition when everything rolls. Got in just a shade early. Waiting for that market flow signal right from support would have got you about the same entry without the heartburn. Now here we go. Smalls above the large are wide. They're angled in the direction of the trend. If we get a pullback, can we identify those areas of potential support inside of favorable large triggers? Guys, if you have your camera software, take this picture. This is what we call a pre-trade picture. If you start running it through your brain and talking this out, am I coming from a good bottom? Yes. Do I have odds favorable? Yes. No termination conditions? Yes. Area for entries inside of favorable large triggers? Yes. My checklist has been met. Can you analyze it that fast? Can you look at it that quickly and determine? Termination condition, yes. Full reversal, yes. Odds favorable, yes. No termination conditions, oh, not quite. I've reached an area of resistance and absolutely none of my trigger lines have broken through it. That's the analysis, that fast. Now I have a 50-50. My smalls are breaking through, my large have not. Right into that mid band. It's all about the analysis. All about the analysis. Smalls are breaking through the area, the large have not. Everything's coming from a termination condition. It's got a pretty big window of opportunity. This is one of those ones where I might say, I need a perfect entry on my 5-1 in order to look for this one. Divergence prints. It's not the perfect entry, right? My window of opportunity goes from 67 to 60. Let's see what happens. That S&P, they're trying. Guys, what do you want to talk about? Is there a concept you want a little help with? Is anybody taking a trade? You'd like to share a picture? Should we see what happens on a 50-50 with divergence? Termination condition at the bottom, smalls above the large. The large have two areas that haven't broken yet. I have a loss of momentum on my 5-1. And there's the window of opportunity. Ed, let's see what you did. How far will it go? I don't know. I never know. I am 100% Remora. Ed, why behind the 1-to-1s instead of right above? Just curious. I don't see any fibs anywhere. So you have a mid-band and you have one-to-ones. That one-to-one constitutes the top of your window of opportunity. So far, that 50-50, if you take a medium probability trade, you have to be willing to manage assertively. You've already taken your $100. Maybe you're at break even. If you took that 50-50, nice trade, guys. That one doesn't look like it made it, did it? That's all right. Gary, let's see what you did. Gary's willing to take that 50-50, willing to manage assertively. $50-50 trades. If no divergence, enter on the trade. Gary, you broke your rule, didn't you? Am I reading that wrong? 50-50 trades. If no divergence on 5-1, enter trade. You're probably managing your trade right now. I'll leave you alone. Miss Alyssa, let's see what you did. Beautiful. Got in early, didn't you? Alyssa, do you see that patience piece? Yeah. I think a lot of people did. When it doesn't quite make it, that's where your fear of missing too much coffee. Why exit here? Just curious. Why not at least wait for the divergence line? You thought it would turn on you. Alyssa, I can't tell you how much my thoughts cost me. So let's do this real quick. Watch this. Whoops, missed. You ready? I'm just going to blow this up, assuming my fat fingers work. And this is one of those lessons that everybody has to learn. Are you ready, Alyssa? What direction is that market going on the 13-2? What kind of momentum does that market have on the 13-2? This is how I learned to manage my trades and to get a little more out of them. You would say weakening. I would say strong. I would say that if I go, and that's okay, because this may be an idea, this may be a concept. When my small triggers are outside of my large triggers, when there's space between the two, Alyssa, I have odds favorable momentum. Irrefutable. So if we go back to yours, you had a crazy strong downtrend with odds favorable momentum and not a thing in the way, right? Do you see it? You don't always see it in the moment, especially as you get going. So if I take all of those advantages, and now let's look at your 5-1 at the time of the trade. We're coming from a mid-band inside. Everything says down, nothing in the way. This is where I always remind myself, what is my 5-1? My 5-1's an entry chart, right? The 13-2 tells me what's likely to happen. It tells me when the market has odds favorable momentum. It tells me where the market is likely to go. It tells me where the market is likely to stop. This is just an entry chart. I'm looking for that entry inside of favorable large triggers, that mid-band. When this looks like this, Alyssa, I find it easier to ignore these things. Now, if it comes down and prints a third divergence, That's a great exit condition. But you've already made money on 5 contracts, right? And this is conversations that I have with my brother because, guys, I teach the class, but I'm a constant student. Nope. Where are those small triggers when the second divergence prints? Still odds favorable, right? Pretty cool. That's my, this is screaming, these are below. Let that do, especially, I love your exit on this one. Get out of the trouble spot, right? You made 2.5, 2.5, 5, like you're up. Oh my gosh. 10 points. 2.5 times 5. Yeah. Let that one run. Oh, you're a 10 lot. Let it run. When the 13-2 has odds favorable momentum, this is when runners run. When it looks like this, that's where I manage a little more assertively. Does that make sense? Because I think it's a beautiful trade. And I think that these are the little things as you grow with the software that really begin to make the money happen. I'm here in Sarasota this weekend, and John and I were trading last week. And I took a trade, and we took the exact same trade, and I took my $300 on it. He goes, man. And that's what my plan says. But he goes, look at those trigger lines. Trust the lines. Trust the lines. You've already made money. You're coming out positive. This 13-2, when I'm managing and I'm watching this 13-2, it takes away that nervous a little bit. Would you wait for them to go inside before you go conservative? These, yeah. When I have odds favorable momentum and nothing in the way, and let me show you why. Odds favorable, odds favorable, odds favorable. Even here, they slow. But when I have odds favorable momentum, it tends to keep moving. This is a trust thing. Look at how many times with odds favorable momentum, it keeps moving. And then it doesn't always. And you'll notice that when the odds favorable, but look at the difference. When you have odds favorable on a 50-50, those are the ones, that's where the fibs come into play. But when you have odds favorable with nothing in the way, that market keeps moving. So that's why we start with the trigger lines. That's why we start with the odds favorable. And then when you couple odds favorable with absolutely nothing in the way, the odds of that market continuing in the direction of the trend go up exponentially. And that's when you start being able to manage your trades with a little more or a little less adrenaline into it. And guys, I love it. This is the best part about learning to trade. Is it's like learning to play golf. You add something on and you keep getting better. Geo. So Geo, we have anything can happen triggers, right? Let's make this a little bigger. I've got smalls inside of the large, and I have absolutely no trigger lines. Oh, here I'm straight into Geo. Are you with me? Awesome. Guys, this is one of the reasons why I really appreciate you guys writing your rules on the chart. Geo, will you play along with me here? Because I think this is going to help you. We are coming from a good top, right? We had something that set that in motion. So let's go through it. Do you have odds favorable momentum? Okay, perfect. Then I'm just going to go through it as though you had taken a trade that you needed help with. But now we know that this was a test, right? Didn't have odds favorable momentum. That's okay. That's not always a killer. No termination conditions, and that one wasn't true either. And then no area for entry. And this checklist will help you. The rules will help you. And I like this, Geo. So do me a favor. Every time you take a trade, not just your test ones, let's have a conversation about it. And let's get you exactly where you want to be. But that's perfect. Good job. Great test. You showed me everything that I needed on that one. And that's how we're going to get you. First to 30. Bring it. Earl, let's see what you did. Smalls above the large, larger wide, angled in the direction of the trend. You didn't wait for that pullback. This time it worked out for you. Rules 1 and 2 met without question, Earl. Rule number 3 not quite met there. Were you prepared with your stop in the event that it went back to an area of support inside of favorable large triggers? And that's the key, isn't it? If you're gonna jump in, if you're gonna hop in where you hopped in, and not you, Earl, you knew where it was, you know that your stop has to go where the market shouldn't. And if you're willing to accept that risk, all that momentum gets you to a pretty easy winner. I like it. I think you handled it well. Stop placement's a great thing. You did a wonderful job with it. Let's see where we're at. Gary. Good top or bottom. I love when he does this. We saw the entry on this one, the 50-50. He's taken 2 of his contracts off. He's managed aggressively, 0 loss level. Nice job, Gary. Good management. NG time, we'll go to the one that we can see. Thanks for the repost there. You took the 50-50, 1 contract, got your $100. Followed close after 100, stopped out. I love it. NG time, what you did is you said, this isn't the highest probability trade, but I've got a beautiful area for entry. I'll manage it assertively. I think that you pulled that one off well. Nice job. Guys, great trading today. Y'all are doing wonderful. Let's see what we have. All right, here's a question. You ready? Who took a loser here? With odds favorable momentum, no termination conditions, and a pullback to an area of support inside of favorable large triggers. Am I the only person in this room that would have gone long? All right. Guys, let's talk through this. Is the market coming from a good bottom? Yes or no, guys? Do I have a termination condition that creates a full reversal? Yes, absolutely. There's the first one. Do I have odds favorable momentum? Anybody? Do I have smalls above the larger wide, angled in the direction of the trend? Are the odds favorable for this trend to continue? I say yes. Guys, you know that I know this stuff. I want to make sure that you know it. No termination conditions, 100%. Area for entry inside of favorable large triggers, 100%. All right, so let me ask this. Were the rules met for a high probability trend trade for an entry just above the mid-band? Yes, definitely, 100%. If you entered this trade at 39.50, your initial stop went where the market shouldn't go. Give me a Y if you see it. Your initial stop goes below the window of opportunity. Yes? Once the reversal bar forms, you're 2 ticks below. 4 ticks of risk. Guys, if you didn't take this trade, you probably don't trust your rules. That was absolutely beautiful. I would take this loser every time, without question, without hesitation. And the market would have to come and take my ticks. Anything that wins 70 to 80% of the time, guys, has to lose 20 to 30. It's a mathematical truth. We don't control the market. All we do is trade a plan that gives us advantages. The advantage of momentum, of a clear path, and an entry where the market is likely to continue. They just wanted to go a little lower. And they finished the move all the way up to the top. I would get in trouble if I didn't have that loser on my P&L. Because my plan says, guys, this is why we write a plan. This is why we take these pictures. More importantly, this is why we put them in class. And I'm going to put this one in my spreadsheet, in my best of the best looks, even as a loser, because it is a perfect high probability trend trade, and it just didn't work. Guys, do me a favor, give me a Y in the room, because this is the part that new users have trouble with. Well, it didn't work. What did I do wrong? It didn't work. Are my rules broken? It didn't work. What did I miss? Guys, you didn't miss a thing. If you took this loser, you took the perfect trade. And if you took the perfect trade with all of the advantages, you have to trust the methodology enough to take it again when it happens. If I take 10 trades, guys, I'm probably going to lose 3 of them. I don't get to choose which 3. I have to trust my methodology enough to take it. NG time, we got another one of those incompletes in there. If you want to repost. Gary, good top or bottom? Termination condition. Termination condition present, no trade. Gary, nice job. Triggers coming off of a weak turn. No term. So here's that 50-50, Geo. I love exactly where your head was at on this one. But imagine for a second if instead of jumping in here, you waited for the pullback to here. That's about 65. That turns this 8-tick trade into a 28-tick trade. That's a $200 difference. And that's $200 less in risk as well. Do you understand why? Guys, rule number 3 is the hardest one for new users. I know because I've been a new user. See a lot of people that jump in up here, a lot of people that jump in at the top of this bar. If you just simply wait for that pullback to the best of the best, wait for that pullback to the area of support inside of favorable large triggers, it gives you the opportunity to make a lot more money, and it gives you the opportunity to reduce that risk. That's what it's all about, guys, right? Anything can happen triggers. That's a small issue. No termination conditions. Area of support inside of favorable large triggers. Thank you for posting, Geo. Guys, even the good trades, even the winning trades, I like to talk about them. Because if you can make a good trade better, don't you want to? NG time, 13.2 coming right off resistance. 5.1, 3 divergences in the same location. You're using that 21 from a term, looking for continuation, and it just didn't get you at that pivot stop out. You were close. Very close. Resisted the FOMO. I like it. And you had a killer termination condition there. I don't think everybody did. I think without this fib, looking for the pivot stop out, but you didn't have anything else to help it, and then it didn't give you any opportunities. That was kind of a tough one. That was a tougher trade to take. Your 21.3 said up. Your 13.2 said it may bounce. Your 5.1 said it might be over. I don't think there's anything wrong with not taking an entry on that one. That's the one that I would have taken a loser on. Guys, look at this. Anything can happen triggers. You gave away the advantage of momentum. 2 divergences. You gave away the advantage of momentum 2 more times. If you took the trade, it was manageable with the reversal bar, but this was not a high probability trend trade. This was a medium probability trend trade. Must be managed assertively. The cool thing is that if you got in at 11, you probably made $100 and then got out break even. If you didn't get out, if you kept your stop, you might have lost $30 or $40 on a trade that had a potential to do a lot more. So let's mark up this chart. Sure, Bruce. What's your question? Anything specific? Does that make sense, guys? Medium probability. Because you don't have odds favorable momentum, it must be managed assertively. If you manage it assertively, it gives you an opportunity to get out when things don't go your way. Tell you what, I'm going to leave you guys with the live market for a second. Bruce, when I come back, we're going to talk about market flow a little bit. Before we get into our conversation, I'm going to give you one reminder here. And we'll talk about it for sure, because I think that it's a great plan to want to add that chart to what you're doing when you learn to read indicators. So when I come back, we'll start talking about it. We'll look at the charts that you guys post. And Bruce, if you have any specific questions, let me know. Otherwise, we're going to talk about it in a pretty basic form. And I'll be back in just a few minutes